Gold had a pretty nasty week last week, giving back some of its gains, and I actually went long towards the end of Friday. So let's talk a little bit about this gold trade that I'm in. Let's also talk about the indices, which I have positions in, and multiple currency pairs that I also have trades on. If you enjoy these videos, make sure to hit the thumbs up button and subscribe. Let's jump right into it. So first up, I do want to talk about gold and why I chose to get long on gold on Friday. So everything that we've got going on in our world right now has been really hectic over the last few months. However, we've seen some relative calming in the markets. And what I mean specifically about that is the volatility index shot up here as far as like almost 60, which is a huge spike in volatility, telling us that the bond market sort of forecasted that the stock market, that the gold market, currencies were going to go crazy. And they did for a little while, but we've recently seen everything kind of calm down. If you've been looking at your charts and being like, hey, why is everything kind of not moving that much? Look no further than the VIX, which has showed us that, again, a lot of stuff which was moving huge over here has started to kind of enter into this grindy, sideways, more calm environment. And so with that volatility drying up in the VIX, typically, not always, but often enough worth mentioning, when you get a cooling off in volatility, it means that people are more relaxed and less fearful about what could happen in markets. And so, as you might expect, gold also doesn't typically thrive in that environment. Take a look at when we saw gold skyrocket back in April. That was right around when that VIX was going crazy too. It makes sense when investors and traders are like, oh my gosh, what is going on? We don't know where to put money. We don't know what to do. Should we sell everything? Should we buy stocks? Right? So when you have that panic in markets, gold is sort of this alternative that people love to rush to. And so we've entered into this period recently where we've consolidated sideways. And I want to talk about this gold position because why have I chosen to buy gold just when everything seems to have started to calm down? Well, because in some ways I like to play the contrarian side of things when it comes to markets. Now that everybody thinks, okay, we've got ceasefire, we've got, most things looking okay now, ceasefire in the Middle East, we've got trade deals likely coming. On Friday, we did get some evidence that Canada and the U.S., their relations have turned south a little bit, which could cause some worries over the weekend and into the new week. So really, the reason I took this gold trade is because first and foremost, it marries up with my system. I have a automated process to when I can and cannot take trades. 9 times out of 10, I am looking to the EdgeFinder as my top setups scanner, which I don't know if you guys took advantage of the free week or not, but please let me know what you thought about the tool. The EdgeFinder was available for free until, well, it's still available for free. Technically, I'll leave the link if there's any latecomers. If you want to try out the EdgeFinder completely for free, there will be a link in the description of this video for you to try it completely free. Like, there's no credit card, no nothing, no gimmicks. It's just we would like people to try out the tool and see if they like it and potentially buy it or at least give us feedback on the tool. So EdgeFinder gives me a +7 on gold, and I say, okay, what's the thought process here? Well, essentially the economic data in the United States has been showing some severe cooling, right? It's not crashing. The U.S. economy doesn't seem to be crashing at this time. But if we just take a quick look, this is why I like the idea of picking up a gold long position. Take a look here at the U.S. economic heat map here, and what we can see is we're getting a lot of bearish impact on this column here on the right. All that's telling us is that when looking at things like GDP statistics, manufacturing PMIs, services PMIs, we are getting some softness in this surprise metric. And so when we see, GDP numbers coming in softer than expected, or we see PMIs coming in lower than expected, this is telling us that the U.S. economy is showing signs, at least right now, of cooling. So I think that will lead us into a period where we cut interest rates and where, the economy is sort of in repair mode before it can go into, potentially another growth cycle. So in that environment, I am a little bit more oriented towards staying bearish. Now, I know everyone seems to be bearish on the dollar now, but I've been bearish on the dollar for a while. I still think that even though crowd consensus is kind of that the dollar should go lower, I think that that's actually right. So in this case, I am with the crowd in some ways. Many people are bearish on the dollar all across like Wall Street and analyst reports all over the place, very bearish on the dollar. But I think that can continue to push gold higher, and I think that other currencies can continue to regain ground against the US dollar specifically. So I picked up a long position. I put a stop loss below, and this is a bit of a hedge to my existing positioning. What do I mean by that? Well, I am long the German DAX and I am long the Russell pretty heavily in my account. Both of these are good sized trades that are going really well. And so by adding gold into the mix, it's a bit of a hedge to the situation. So when it comes to my positioning, I do take a holistic view of my portfolio when considering new trades or handling existing trades. What I mean by that is a simple example would be if I'm super long the euro dollar, I don't necessarily want to take a whole bunch of big positions on pound dollar and Aussie dollar and NZD USD. If I already have a big position on the euro dollar, I don't want to add too much exposure to the US dollar. That's a currency trade example. But this same thought process, this portfolio view, which I encourage traders to learn about and consider how they handle, like a portfolio view says, okay, I am long indices, which are a risk on play. And they've run really good here recently. Take a look at, for example, the NASDAQ, which I think can continue, but has had a really good push to the upside. I wouldn't be surprised if Canadian relations or whatever, some story comes out that causes the indices to pull back for a little while, and perhaps gold can thrive in that environment again. So it's not necessarily a big bet that I think, the world's going to go into chaos again, but rather we've had a little bit of peace, we've had a little calming down here. And I think that gold is still in what I consider a very strong overall higher time frame upward trend. And if I'm wrong, I'll take a little bit of a loss. That's how hedging works, right? When you're hedging a portfolio's kind of allocation, you have to consider that if you're hedging, you're sometimes going to be, you're inevitably likely to be wrong on some things and take a little bit off due to your hedge. You're essentially paying the premium for the potential insurance that a long on gold could give you, right? So that's kind of what I'm thinking with gold. I do think it has upside. I do think that rate cuts favor gold upside, and it is also possible that gold and indices can both kind of continue to move north from here. So we'll see, but I do like the gold long position. I'm also interested in silver, but specifically on silver, I would like to see a bigger pullback into this 34.50 level. And like I said, with the indices positions that I'm in, Russell, I trailed stops further in our VIP room on Friday, and the German DAX, I have not yet trailed stops. I barely stayed in this trade. We came down here, didn't stop out, but almost did. Came back into now a profitable position, and if we can take out these highs, that will be a cue for me to go ahead and take this stop loss and trail it further into, or trail it into profit, locking something in. I do like to trail stops predominantly when trading indices, gold, commodities, etc. Let's keep going. Let's talk a little bit about what happened in oil. Oil prices dropped big, which was a relief to markets because, again, with oil prices rising dramatically, the concern is, inflation can rise. But we've seen in the economic data that for the most part, inflation's doing all right. We did get a tick up in PCE year over year, but I believe core was actually soft, but headline was a little bit hot. That being said, however, we still have inflation, our major three metrics in the twos, right? So 2.4 for CPI, 2.6 for year-over-year PPI, and 2.7 PCE year over year. So we have inflation on its way down, which is a great sign and gives the stock market some relief. It gives gold and silver some relief because in that regard, we can expect that the Fed is probably, if things continue to go down the path that they're going, to cut interest rates, which again, I think oil prices staying at bay and not skyrocketing gives us a nice extra confirmation that inflation can remain cooling, which helps with the story overall on inflation. So I think that continues to give tailwind to things like gold, silver, and indices because, again, muted oil prices, cooling inflation, and trade deals that are likely coming. I stay in the direction of the upward trend. And I want to say this, I was early to this bullishness, very early. If you've been watching my channel, I was buying stocks, pretty much most of the way down. Once we started into May, I started buying stocks pretty aggressively, like individual stocks, which I talk about on my second channel, Trader Nick Stocks. If you're interested in that sort of stuff, if you like stocks, specifically things like, Google and Nvidia and Walmart, Home Depot, all these individual companies. If you're interested in that, make sure to check out Trader Nick Stocks on YouTube. It is my second channel. That's Trader Nick Stocks. But specifically on the indices, I got long the Russell because I think that rate cuts are coming. And so if I think rate cuts are coming, I want to be poised in the areas of the market that I think are, really going to love the idea of rate cuts, which small cap companies are that story. We're sitting at a resistance point. I would love to see this thing have a strong breakout here to continue its rise. And I think that the Russell specifically has a lot of room to catch up. We're still, while the NASDAQ and S&P 500 are at all-time highs, the Russell is still 13, 14% away from putting in fresh highs. So I think that gives me plenty of upside. And I do think that the Russell will have a catch-up period sometime soon. So we'll see if I'm right about that. I've definitely been early to that theory before, but the Russell is a trade that I'm riding now. Let's see if we can get it right this time. So let's take a look at the dollar index. We talked about it briefly. Big move lower. Again, soft economic data here recently. Not crashing. I always try and illustrate this because new to fundamental people might hear me say, we're getting bearish impact and say, oh, the U.S. economy is entering a recession. I don't think we're entering into a recession. However, we are seeing some signs that the economy is not necessarily, crashing, but slowing down. And there is a difference between a recession and a slowing economy. So if we take a look at, for example, GDP growth forecast, this might be interesting to some. This is a new feature that I added here on the EdgeFinder. What you can see here is that for Q2, we are expecting, this is where, again, it's hard to say the U.S. economy is entering a recession when Q2 forecasts for GDP growth of 3.5%. Head and shoulders above our neighbors or our peers here, with the UK and Japan suggesting 0.3% growth and 0.1% growth for Europe, right? And you can see that that's kind of the theme going out the rest of this year and going into 2026. Economists are forecasting, strong economic growth for the U.S. despite all of the craziness. So yes, we're seeing a little bit of a slowdown period here. A lot of this is due to, or at least perceived to be due to, a lot of imports being pulled forward. A lot of people importing a bunch of goods ahead of the tariffs, causing the GDP stat to tank, right? Because imports play a role in the GDP statistic that we all kind of reference. So we're expected to see a big bounce back in GDP, 3.5% in Q2. So we'll see how all that plays out. But just something to think about. Let's also take a quick look at the Commitment of Traders report, see how things are going here. So if I pull up the COT data for the previous week, let's see what we got. Okay, so in terms of what we're looking at here, I always have to remember that new people are watching my videos. So the Commitment of Traders net positioning table here up top is worth looking at, but I tried my best not to overhype this because this is much more suited. Just net positioning is more suited towards longer term investing or long-term trading even, because what this shows you is the overall positioning of institutions on a overall basis. Now this changes very small week to week. Like this, the long position on euro, for example, might go from 66.5% to 66%. And that's not a big, noticeable change. So what we've done to make this process easier is we can see the overall positioning. So they've been long gold for like 3 years now, right? So that's not very impactful to a short-term trader. But knowing that they overall have a long position on gold is still useful information. So they're bullish on gold, they're bullish on silver, bullish on the Japanese yen, bullish on oil, bullish on the South African rand, bullish on the euro, bullish on the Nikkei, bullish on the Dow Jones, bullish on platinum, bullish on copper. And who's they, by the way? I'm talking about institutions that are required to report. These are hedge funds, asset managers, all sorts of professional money that has to report to the CFTC's Commitment of Traders report, so we can track institutions through this. Take a look at the GBP, also slightly bullish with a 60.4% long bias. And then we get into sort of our neutrals. That's the NASDAQ. The NZD is neutral. Bitcoin neutral. Russell neutral. And then we get into our, dollar still neutral too. Institutionals 59.25, very close to being net bearish on dollar. I'm defining net bearish by 60% or greater one way or the other. Take a look at SPX, they're net bearish. Excuse me. And then you have the 10-year treasuries, also net bearish, CAD, Swiss franc, and Aussie. So if I now scroll down, this is the table I really wanted to show you guys, which is the latest weekly COT buys and sells. This is where we can see what they actually did on a week-to-week change basis. It shows us essentially their buys and sells. So if I take a look at their buys, NZD, 10-year treasuries, Russell, copper, platinum, euro, SPX, CAD, and NASDAQ is kind of mixed. And then if we get into our sells, we've got the Dow Jones, the dollar, the Nikkei, the British pound, South African rand, U.S. oil, silver, and gold, and a little bit of Bitcoin. So what you can do here is if you have a copy of the EdgeFinder, which again is available for free, I do also want to give a bit of a warning or a heads up to people who made it 15 minutes into my video here. Just so you know, the EdgeFinder is about to enter its biggest summer sale of the entire year. Well, it's biggest discount that we do all year long, and we're doing one for the summer sale. So we're going to have availability for a 40% off discount starting on Tuesday of this week. As soon as we go into July, we're offering a big discount on the EdgeFinder. So if you've enjoyed trying it out, here's your heads up. Wait to buy it until Tuesday, or send us a message on our website just letting us know that you're interested in the sale when it drops, and we will get you that information so that you can get a copy of the tool for lifetime access for 40% off. Right now, like I said, it is still free to use until Monday. So if you want to try it out before then, take advantage of the free trial week that we've done, which is ending, like I said, on Monday. So taking a quick look here overall, right, we have these columns just so you can take a look at them yourself. These are your change in long contracts, change in short contracts, net long percentage, net short percentage, the net change, net positioning, open interest, etc. So there you go. That's kind of a overall look at the commitment of traders report. And let's also take a look here as we're going into July. Why not take a look at some seasonality? So for gold seasonality, it is expected to pretty much be a flat month on a historical 10-year basis for gold. Let's take a look at some indices here as well. So if I take a look at the NASDAQ is expected to be strong in July. I mean, we've seen this holding up really well seasonally. We've had strength in May and June, the summer months, or the spring and summer months. Historically here, the last 10 years have been very strong. That continues to hold up here, as we can see with our previous month's performance. The dotted line is the performance this year. The blue bars are the 10-year average historical performance. So we are expecting positive gains in May, June, and July. We'll see if that can happen, but July, in my view, looks good for NASDAQ to continue to run. We may get pullbacks in between somewhere, but my bias right now would be to buy dips if I can get some in the indices. That is also apparent on our top setups page within the EdgeFinder. So we'll see, NASDAQ, things like that. DAX also on the list. We'll keep a close eye on that. Let's take a look at some currency pairs here. Taking a look at the euro dollar, we do have this thing continuing to run hot here recently. In fact, let me just see where are we at with, let's go categories and do major currency pairs. Euro dollar still very bullish on the EdgeFinder, so I like this trade a lot. I took some profits on my euro longs, and I'm looking for pullbacks on this again. So if we can get some pullbacks in the euro, I may look to rejoin the trade. I like it quite a bit to the long side. Chart looks great. Fundamentals, like I said, still favor bearishness for the dollar in my view. And so let's also take a look at the next up on the list, which is going to be NZD USD. So if I take a look at the Kiwi dollar, sitting at resistance, would be interested in potentially getting long the Kiwi dollar on a break and retest or a pullback into this support level. So that is on the watch list as well. The Australian dollar versus the US dollar, also getting a bullish rating here. Let's go. Oops, sorry, my keyboard freaked out. Take a look at the AUD USD. Same concept as Kiwi dollar. We're sitting at a resistance point here. Let's see if we can get a break above this high and a retest, or a move back down to this previous swing low that we saw. Pound dollar also getting bullish. Looks very similar to the euro. Big push up. So pullbacks, I would be interested in either a pullback to this area here, 1.36 or 1.34. And when I say I'm interested in pullbacks, let me add one condition there. I'm interested in the pullbacks as long as the EdgeFinder is still giving me this reading, right? So if the market pulls back and the EdgeFinder is not giving me that reading, then I'm probably not going to take the trade, which could be due to economic data changing or something like that. Dollar yen, dollar CAD, and dollar Swiss are three major dollar pairs getting bearish readings. Let's just go through them really quick. Dollar Swiss is an easy one. This thing is just trending lower here, broke through support. Retests, in my view, would be bearish. Dollar CAD, same thing, then trending lower really well here. A pullback up into this area here, or this area here. Both of those look like possible short setups for me on the dollar CAD. And the dollar yen has been a little choppy here recently. So let's just pull this one up. Maybe a move back up into the top of this range around 148.50. That sort of thing looks good. for possible shorts or a break through the lows and retest. But lots of dollar bearishness here, and I'm going to stay with that trade because it's worked really well for me for the last several months. Has been predominantly bearish on the dollar, bullish on bullish on commodities and bullish on indices. So I'm going to stick with the trade for now, and if we can continue to see those sorts of things play out, I'll just keep riding trailing stops and taking profits on moves. Remember that all trades that I take get shared inside of our VIP room. Just a heads up. Oh, hey, there's me. Good to see you. Let me see, there's our VIP promo. If you want 40% off the EdgeFinder, take advantage here. I can turn my camera on for you guys. Boom. If you want 40% off the VIP group, this is your last chance to do so. The link is in the description below this video. And if you use that promo code YTVIP, get 40% off the VIP memberships before that ends. Get access to all the trades being sent directly to members. Anytime I take a new position or update an existing one, you can find it there. Thank you guys so much for watching. Have a great week ahead, and we'll see you in the next one.